Okay, it seems like we're at that 2 o'clock mark. So I will start the webinar now. So good afternoon, everyone. I hope you had a great May 2-4 long weekend. My name is Brandon Strong, and I am the Associate Business Development Rep here at Morningstar CPMS. So in today's workshop, we are aiming to accomplish 2 things. We're looking to refine your knowledge of CPMS factors while providing guidance as to when, why, and how to possibly use them, and 2, how to create your own factors using the factor building tool. So the second part of the webinar is somewhat straightforward. We'll open the custom factor building tool within CPMS and demonstrate how to use it. And in the first part of the webinar, we will work through example questions that an investment advisor or asset manager may have when deciding on which factors are useful for ranking and screening equities for a particular investment style or goal. So one example would be, I, the client, want to find factors that will aid in screening stocks with deep value characteristics. So the examples will pertain to some aspect of a stock's theme, style, or characteristic. And based on each example, we'll touch on factors we believe are suited for finding these type of equities. So the topics we plan to address in today's workshop are value and income, liquidity, momentum, growth, risk and health, estimates, and ESG. So due to time constraints, we won't be able to tackle every topic area. However, we are happy to do this on a one-on-one basis if you have any examples that we didn't address today. So with that being said, let's move on to the agenda of today's workshop. Just click through here. So as I mentioned before, in today's workshop, we'll discuss a variety of CPMS factors, providing some guidance as to when and why to use them. And at the end, we'll show you how to create your own within CPMS's factor building tool. And as always, we'll open the floor to questions at the end of the presentation. I have the chat enabled. So if you have a question, please just enter it into the chat. I will address those questions at the end of the presentation, but I recommend that you just input it in the chat so you don't forget about it. Just makes things easier. So any questions that we cannot get to in the allotted time will be answered with a follow-up email by myself or one of the other account managers at CPMS. So let's kick off part 1 of the webinar with the topic of value and income. And the first step is opening up CPMS. So I'm just going to minimize this here and open up CPMS. And feel free to follow along if you would like. As always, more than welcome to do so. So starting here on the home module, I first want to talk about a handy and convenient tool that some users may not already know about or know that it's available. So on the far right, users can see that we have this feature here called tips and hints. And keep in mind that this same feature is included on the other 4 modules as well. So strategies, portfolios, reports, and charts. And this feature is extremely handy if the user would like the description or calculation of a specific factor on the fly. So if we scroll over the name, tips and hints over here, you'll see this box pop out to the left, and users can pin it using the pin icon found here. So that will prevent it from closing when you scroll away. But here, let's say the user wants to learn more about QEM, for example. So we can type in QEM, which is quarterly earnings momentum. I can either press enter or I can just click the factor here. So once I type in the code, it will display the description and calculation breakdown. So just something here for convenience. But instead, for today's workshop or for today's demonstration, we are going to use the strategy creation / editing interface when locating our factors. So to open that interface, we need to be on the strategies module of CPMS. So I'll go over to the strategies module, and I'll have to be on the buy list of the particular strategy I'm working on. Here we're using Joe's strategy, and the edit button is where we can edit a pre-existing strategy. The interface for creating a strategy and editing a strategy are very similar. They're actually the exact same. So we click edit, and here it'll pop up the interface. So users will notice that we have a few tabs on the left, universe and ranking, and rank and variable screening. And these 2 tabs include a button called add. So you can see it on both sides, which is used for adding our factors. And just quickly noting here that the ranking weights, or DOIs, degrees of importance, as we call them, are set within the universe and ranking tab, and the buy and sell rules are set on the variable and screening tab. So just a little bit of information there just in case. So what we'll do is we'll press add. And once we click that button, CPMS will open the CPMS factor navigation tree. And while you do have the ability to search for factors using the search bar, we do recommend using the tree as it tends to narrow down the search faster. However, if you know the factor identifier, so for example, I looked up QEM last time, it'd be way easier just to type in QEM and press enter to add it over to our selected items on the right. So users have roughly 4,000 plus factors for ranking, screening, and backtesting purposes. And again, we believe that there are certain factors within the CPMS database that may be underutilized, or the context of when to potentially use some of these factors is unclear. And since that's the overarching theme of today's workshop, we're going to dig a bit deeper into the value and income arms of the navigation tree. So to begin, we will dive into the value arm first. And when I click on value, you may notice a whole list, or you probably notice a whole list of different value factors populate in the box below. And from here, we have the option of sifting through the current list of factors, or we can drill down into a separate subcategory, for example, price to earnings, to narrow down the search. And just noting here quickly that we can select any factor, use the arrow button to bring it over to the selected item side, and then when you press OK, those items will be available for either ranking or setting your screens. Okay, so here under the subcategory section, we can see that most of these ratios are quite common, such as price to earnings, price to cash flow, price to book. However, we can get a lot more specific than just the typical PE ratio, as evident by these period categories on the right. So moving on to our first example, as we know, the PE ratio is a commonly used value measure of a firm and helpful for assessing if a company is under or overvalued. But the caveat to that assessment is what is considered a good or bad PE. And PE, as most of us know, can provide more context or become of greater value if used on an industry relative basis, as the median PE of the tech sector is very different than the median PE of the utility sector, for example. So if we want to take that into consideration, then we should use the industry relative value as the means of comparison when assessing PEs across multiple sectors. And users can locate these factors by clicking this industry relative section here. You'll notice that we have 7 different factors listed under this specific heading. So the major differences between the listed factors presented here are the periods in which we want to base the PE from. So we have the option of using previous year, current year, or next year median EPS, each with their own use case. For example, next year median would be a forward-looking factor based on an estimated value of EPS for next year, whereas IR TP/E is based off a reported number based on trailing EPS and would be unaffected by estimate data. Okay, so moving on, another instance of using PE as a factor in a less traditional way would be comparing the PE of a stock to the overall PE of a specific market, such as the S&P TSX. And using the market as a means of comparison can be an effective strategy for managing risk. So one example that we've seen before and I've done before is we could hypothetically add a factor called, I'll type it in here, it's called CRPECYM. I'm going to type in a few factors for here and there just because it's easier as I know the identifier. So I'll just press enter. And here you'll see it's price to earnings on current year median EPS versus the S&P TSX composite PE. So if you wanted to, potentially you could apply a buy rule of, let's say, less than or equal to 15 times, and apply a sell rule of greater than or equal to 35 times to keep the stocks within our strategy at a reasonable distance to the market in terms of their PE. So that's just one example of using this factor. Or as seen before, we can use it as a buy and or sell rule and use an and/or function, depending if we're on the buy rule side or the sell rule side, and couple it with a commonly used value factor on the individual stock level, which would aid in reducing our risk exposure to both market risk and individual stock risk. So This may be a bit confusing, but we can always take this away to a one-on-one discussion. And I'm going to emphasize that throughout the presentation, that any of this information that we don't go into the weeds, we're happy to take it away and discuss further with a call or email. So let's move on to another area of the value category that pertains to dividends. So I will click into the section called Payout Ratio. And we'll find a list of factors, some meant for backtesting and others simply used for views or creating your own custom factors. And just a quick hint here, the factors that we have, or the factors that have a backtesting start date as current date, or have the words fiscal in their name, are not intended to be used for running backtests. And I think a lot of us know that, but occasionally I see individuals trying to add these current date factors into their strategies, but they're not intended because they don't have backtesting history. They only have the current date. So just continuing on here, the period we want to dive a bit deeper into today is the estimated section. So that's right here. And then I'm just going to click on Pay CYM. So this factor is the dollar amount of dividends estimated to be paid in the next 12 months, expressed as a percentage of EPS estimated to be earned in the current fiscal year. So we strongly advocate for this factor to be layered into any strategy with a focus on income. And the simple reason being that companies with payout ratios greater than 100% are at a high risk of not being able to sustain their dividend going forward. So we've seen this factor commonly used as both a buy and sell rule, as we want to be buying at a value somewhere below 100% and selling if the value is above. And we do suggest giving this factor some wiggle room between the thresholds. So instead of having the absolute or relative grade for the screen be set at the exact same amount, like 80%, 80%, we would set it up as pay CYM is less than or equal to 80% on the buy rule side and greater than 100% on the sell rule side, just as an example here. But it would be your preference as to what that threshold would be. Now, quickly moving over to the dividend section here, we have 4 different subcategories, and the momentum subcategory has a few notable factors we want to touch on. So for example, if the user is looking for companies that are growing their dividend, or they want to see steady growth of dividends for multiple years, this section would be of great use. And here, the first factor at the top, grow div, would be a great factor to consider incorporating in your strategy, whether that be as a rank or screen. And we can see that it measures the percentage difference between the expected annual dividend rate and the actual trailing dividend paid in the last 4 quarters. So something to consider here. We also have standard deviation of 3-year dividend growth, 5-year, 10-year. And we also have this factor here, the 5-year normalized dividend growth expressed as an annualized percentage. So a few factors here to consider. So a lot of different avenues you can take that build upon the standard income factors. But again, for the sake of time, we're going to move on to the next section, which is size and liquidity. So let's go over and we'll go up to size and liquidity. So here, just clicking on size and liquidity under the category section. So based on your mandate or a particular investment style you're going after, you should always include some type of size and liquidity discipline. And it's pretty self-explanatory, but I'll give a quick example here. So let's say an asset manager builds a momentum strategy within CPMS. And while constructing the strategy, the user decides not to incorporate any factors pertaining to size and liquidity. And eventually, after following the strategy for some time, this individual receives a buy recommendation from CPMS and tries to execute a large order. And just noting here, let's say this stock has a very small float and relatively no volume. So this individual would ultimately get burned due to the rising bid-ask spread, which would make the strategy impractical in nature. So, well, luckily, CPMS has a wide range of size and liquidity factors that span across multiple time periods, and we capture different aspects of the company's size and liquidity than just the standard just the standard size and liquidity factors you as clients already know about. So we're just first going to dive into the volume subcategory to take a look at a few factors here. So as you can see, we have factors for the value of the volume of shares traded in the last month with $VOLM. We have the number of shares traded over the past year with VOL 1 year. We have average daily volume over 10 days, 40 days, 100 days, and much, much more. So there are plenty of different ways of capturing the volume, either by value or quantity. And sometimes we get asked this, like the question of what's better, value or quantity. It's really up to the preference of the user. So yeah, it would be up to you. So just moving on, looking at the subcategory size. Here, users will see two very important factors. So we have market cap and market float. And most have seen this before, but with market cap and market float, as we know, they differ significantly, as one is based on market capitalization and the other is based on shares available for trading on the open market, so not privately held. And most of us know the differences between the factors themselves, but the way we treat these factors in strategy development is a bit different. And this kind of leads us into a very important topic area of absolute versus dynamic screens. So I'm going to give an example here. Some may already know this, but I think it's really important to drill home this concept. So as an example, the median market cap of the S&P TSX on Jan 1st, 1991 is 314 million. And today, the median market cap is 4 billion. Clearly, things have changed a lot bigger now than it was back then. So if a user creates a buy rule for market cap of greater than or equal to 5 billion in absolute value and backtested that strategy from 1991, the backtest is going to assume when it starts in 1991 to only screen in stocks with a market cap greater than 5 billion. However, 5 billion today is vastly different than 5 billion 30 years ago. So how would we circumvent this issue, you may ask? Well, the solution to the problem is quite simple. Some have seen this before, but the user would use grades instead of absolute values, as grades are relative to the testing period, and they are dynamically shifting from day to day. So the grading system within CPMS is proprietary to our product, but for clients, we are happy to share the calculations if interested, and I have that document ready for anybody who's interested in taking a deeper look. And if you're unsure on how to implement a grade as a buy rule or sell rule, just type it in the chat and I'd be happy to show a quick example at the end of the presentation. And lastly here, we'll move on to the subcategory short. So here we'll find all our short interest factors. And in the past and currently, we do not see very many users creating short strategies or implementing short interest factors in general. However, I would like that to be used more, obviously, and our team would like users to use this section a lot more because I think there's some great value out of here. But users that are typically long equities can still utilize these factors in several ways. So we have factors such as one that I like. It's called SHCHG. So we have 30, 60, and 90 days. And this can be a useful tool for managing risk. So this would be the change in short interest shares over 30, 60, and 90 days. And users can add this factor to a view to monitor the day-to-day changes of their portfolio short interest, or add it as a buy and or sell rule to potentially catch stocks that may be targeted for shorting by hedge funds, let's say. So other notable factors from this section would be SINT MFL and SINT SHR, which are short interest as a percentage of float and short interest as a percentage of shares, respectively. And these are quite unique factors to consider as well. So just using a simple example here, let's say an advisor considers a threshold of 20% as the maximum amount of short interest as a percentage of float that he can handle before he decides that he no longer wants to hold the stock. Either the user sets this threshold for personal reasons, or maybe they're worried about a short attack on a particular stock, as some people on the street call it. So you could potentially implement SINT MFL as a screen with a 20% sell threshold and some corresponding buy threshold to reduce the likelihood of purchasing stocks targeted for shorting. So in the past, we've seen users combine short interest into their own custom factors. And again, we'll go over that tool at the end. But I can leave this up to the imagination to what you as the user can create. But nonetheless, we would be happy to brainstorm some ideas one-on-one if you're interested. So that was a lot to cover in this section. We'll now move on to the momentum category. So click here in momentum. So when clicking on the momentum heading, you can clearly see that we have 5 separate subcategories, and these would be the most important or popular subtopics that users prefer. So we have earnings, sales, cash flow, dividend, and price. And momentum tells a similar story to what we've seen in the value and income category. Users have the option of utilizing momentum factors on an industry relative basis, on an index relative basis, or they can simply create their own using the factor building tool. However, one of the most important aspects to consider when selecting factors within the momentum category is timing. So momentum factors used for periods such as 30, 60, and 90 days are considered fast-moving factors. And price momentum would be a great example of how one factor can really change the dynamic of a model. So if you're focused on keeping the turnover relatively low, for example, then including a price change factor with a period of 30 days could be feasible, but it would need to be implemented strategically. And by that, we mean adding a wider gap between the sell and buy threshold to reduce the likelihood of this factor being triggered more frequently than intended. Or if the factor ends up not being feasible, you can always swap it out for a factor with a longer time period, such as 3 to 6 months. And those price change factors are found down here. So we have multiple time periods that you could pick from. So furthermore, a few of the most commonly used momentum factors that we see and our team sees and I see are QEM, QSM, and QCFM, so quarterly earnings momentum, quarterly sales momentum, and quarterly cash flow momentum. And this one here, I'll just click on it, quarterly earnings momentum, for example. And this factor is calculated as the percentage change between the latest 4 quarters of operating earnings per share and the 4 quarters of operating earnings from 1 quarter ago. So this is actually calculated based on a proprietary method. You may not see other financial tech companies or just other companies out there that calculate their own factors. They may not use this same method to calculating their QEM factor, but essentially we are shifting the calculation by 1 quarter each time as a rolling calculation of earnings momentum. So just something interesting to mention that some users just might not already know about. Okay, so just moving on, I just want to drill down into the price category for a second and go into the relative strength period. So here, users are going to find more proprietary factors within CPMS, and honestly, I don't see these factors used often, but there's something unique that you could test out. So RS1M, for example, is a factor that measures a stock 1-month price change as a percentile of the CPMS universe. So instead of using an index such as the S&P TSX as a means of comparison, you can use the entirety of the CPMS universe to gauge the strength of the stock's price change. And as a bonus, we can gauge that relative strength over a wide range of time periods. So as you can see, we have 3 months, 6 months, a year, and so on. And just quickly noting here, we have momentum factors for EBITDA, EBIT, and EBT, and those are found within the momentum category as well. So that was about it. I want to move on to the growth category for the sake of time. So I'm just going to click on that growth heading here now. And the first thing I want to look at here is the reported earnings subcategory. So users focus on growth and specifically growth in earnings can find a lot of use out of this section. And as we know, earnings growth is very important because growth in earnings can lead to more capital reinvested back into the company. And this ultimately helps them continue to grow in the future. And in this section specifically, we have a factor called 5Y EPS. I'm not going to go search for it now. I'm not going to go look for it in this area below. I'm going to type it in here. So we'll type in 5Y EPS, now press enter. And this is the 5-year normalized EPS growth expressed as an annualized percentage. So users that are looking for a solid track record of EPS growth can use this factor to identify those type of equities. And additionally, users can couple this factor with 5Y EPSD. I'll type that in here, 5Y EPSD, which is the percentage deviation around the annualized 5-year EPS growth rate. So if the user is looking for stable growth, this quasi-growth factor can be a great addition to the user strategy. And now onto another topic, which I find fairly important, is that some users, when they're trying to identify factors within the growth category, they may notice that some of these factors tend to be used more for growth and value strategies, which we call GARP, and others are more commonly used in pure growth strategies. However, they are not mutually exclusive by any means. But some examples of factors which are commonly used in GARP strategies are the reinvestment rate factors. So reinvestment rate is found right here, and I'll just click into that now. And here, I'll just type in RRCYM, because this is one of the most common ones that we use. So the RR factors, and specifically this would be RRCYM, but the RR factors measure the rate at which a company is expected to reinvest earnings back into the business. And again, depending on the preference of the user, we can either use this factor on current year median EPS estimates on a trailing basis, or use next year median EPS estimate if we want a forward-looking indicator within our strategy. And additionally, we have two forms of the PEG ratio, and these are commonly used in GARP strategies as well. So I'll type in PEG here. And for anyone unfamiliar, the PEG ratio compares the price to earnings ratio of a company against its growth rate of earnings. So essentially, we do not want to overpay for each unit of growth. And we have PEG CYM, which uses the current year median growth estimate collected from consensus estimates gathered from street analysts. And then we have PEG RR, where the growth rate of earnings is approximated by the estimated reinvestment rate. So we have two at your disposal that you could use. Now for pure growth strategies, we see the more common factors used, such as ROE and ROTA. So we have ROE, we do CYM, and we also have ROTA, which would be return on equity and return on total assets. Not only do we have those individual factors, but we have ones for the 3-year growth or 5-year growth of the return on equity or the return on total assets. So we type in ROE, or we could type in ROTA. So different factors you can play around with that may be of use to you. Okay, so let's now move on to the next section, risk and health. And I really like this section. There's some interesting factors in here that I would definitely pay attention to and potentially use in one of your strategies. So to kick off the discussion, we're going to click into the risk category. And as the name suggests, the factors found within this category will aid in reducing the risk of the portfolio when implemented correctly, obviously. But for example, a user that wants to develop a low turnover, steady income buy and hold strategy would usually want to screen in companies with predictable earnings, a relatively low beta, and a market cap somewhere close to the median of the universe. Well, if we click into the first subcategory, financial, we have a factor here called beta. So this factor is the 5-year price beta versus the TSX comp, and users can incorporate this factor as a screen or rule, but we typically see this factor used for ranking purposes. And using this factor as a rank makes sense if the goal is to keep the aggregate beta of the portfolio low, while using it as a rule would make more sense if the user had like a strict mandate of only purchasing stocks with a beta below 1.5, for example. So the stocks with a beta of less than 1 are usually more established. Again, most of this is common knowledge, but are less volatile than the market. And typically these companies will have a relatively large market cap and sufficient liquidity. However, the beta factor is not an all-in-one tool to screening in the best blue chip stocks, but it can help round out the strategy by reducing the aggregate beta of the portfolio and in turn reduce the strategy's risk exposure. So that was a little bit about the beta factor. Next, I want to go into the earnings subcategory here. So this factor, EVR, essentially captures the volatility of a stock's earnings. As the more unpredictable they become, the higher the EVR will be. And when this factor is properly implemented into a strategy, it tends to reduce the downside deviation and aids in reducing our risk exposure once again. An interesting experiment you as the user can test would be including this factor as a rank in your own strategy to see how it impacts the standard slash downside deviation over the course of the back test. So it's very interesting to layer this factor in to any strategy to see how it impacts it. And now just moving on to the health portion of this topic area, I want to go into the Morningstar Research category. These factors are proprietary to Morningstar, and the MS research factors found within this category are the quantification of the qualitative research done by our investment research team. So the equity research team is comprised of 100 equity analysts, and they cover 1,400 companies globally. So we want to highlight some notable factors within this section, and those are MS economic moat and MS estimated fair value. But we'll first talk about MS economic moat. So this factor refers to the moat one creates around a castle to keep intruders, or in our case, competitors, at bay for an extended period. So a company's moat is calculated based on the aspects of Porter's 5 forces. So those would be threats of new entrants, threats of substitutes, bargaining power, and so on. And then after assessing all those inputs, a company will receive one of 3 numbers. And a score of 5 indicates a wide moat, 3 would be considered narrow, and a value of 0 would mean that they have no moat. And next, we have the fair value factor. So some users may have heard of a term called the 12-month target price for a stock, which would be the estimated target price for the year based on analyst estimates. Well, this is very similar to the fair value factor within CPMS, but instead of 12 months, it's the company's fair value price based on our research team's estimate of the stock's intrinsic worth. So users can use our estimated fair value to get a sense of the fair value of a stock. And this would ultimately save them the time and resources of building their own discounted cash flow models. Unless you do that yourself, you could always utilize this factor here. So if you'd like a copy of the methodology paper used for some of these factors listed under this category, please do reach out to me by email or phone. I can always source those for you, and I'd be happy to provide you with the documentation. So let's now move on to the estimates portion, almost getting to the second part of the webinar. So hang tight, and we'll get to the factor creation tool soon. So we'll just go over to estimates, trying to find it here. There we go. I'll just click this annual earnings section here. So the reason we included estimates as its own topic area in this workshop is for the simple reason that the market keeps an eye on these estimates. And it's important to understand why and how to use them, as they do aid in creating a robust and well-rounded strategy. And here, just to begin, I just want to go into the annual earnings and then the period values here. So users can locate plenty of factors that pertain to different aspects of a stock's estimate. Obviously, you can always dive a little bit deeper on your own and take a look. We have plenty in this section, but here I just want to point out a few that we think are important to showcase. So common and handy factor would be CY NE now, which is the number of current year EPS estimates. So including a factor like this as a buy rule can be extremely useful if the user incorporates factors based on estimated data. As we saw in the value and income section, we were going to potentially use that PE ratio on current year median EPS or next year median EPS. So because we're using estimated data, it may be best to the user, it's obviously up to your preference, to have a threshold of the number of estimates that stock has. So let's say maybe the user needs at least 5 estimates for a particular stock for it to satisfy their requirement, as a small subset of estimates can be insufficient or biased. But again, this would be up to the preference of the user. So we can locate a different set of estimate factors within the risk category. So I'm just going to go back up to risk. And under the subcategory estimates, a notable factor here would be CY CVE, which is the coefficient of variation of current year EPS estimates. And essentially, this is a statistical measure of the dispersion of estimates around the mean. And typically, a lower dispersion indicates a more favorable trade-off between risk and reward. So some users may avoid stocks if the spread of estimates is too large. So this factor would help alleviate that problem. Now, going back to the estimates section here, we have the period category. Actually, let's go into annual earnings. Sorry about that. And let's go into revisions. So the factors that users will find within this section relate to the revised estimate of a stock. And the factors that we believe are quite important are the factors beginning with ERCYM. So I'll type that in now, ERCYM, and we'll see a bunch of factors populate here. So ERCYM is the estimate revisions for current year median EPS. And this can be captured for 7 days, 30 days, 3 months, and so on. And we use these factors quite frequently in our own models to see what the street is saying, as analyst sentiment is very important. And just noting here that, like I was talking about with dynamic and absolute screens, estimate revisions is one of those factors that we highly recommend applying grades instead of absolute values as buy and or sell rules, because estimate revisions may be slashed across the board, and negative 15% absolute value may not be so bad relative to the rest of the universe, as seen in March 2020 when COVID began. And now that the market has been a little shaky lately, this might be something to consider as well. So just now that was a bit about that, I just want to move on to the final factor for this section, and then we can move on to ESG and finish it off for part 1. So we have a factor in our database called ESRP. So just going to take a second. ESRP. I'll press enter here. So this factor here is quarterly earnings surprise. Some may already know this information, but I think this factor is really unique. So it's a proprietary measure of the percentage difference between the actual and expected earnings for the latest reported quarter. So essentially, this compares the consensus estimate to the scrubbed earnings number that our CPMS data team scrubs. And if we beat the consensus estimate, we'll have a positive surprise. And if we don't, it'll be negative. But we also include a time decay factor as the market catches on over time. So it is pretty unique, and we'd be happy to provide some information on that factor as well if you're interested. So we do use this particular factor ourselves in strategy development, and we do recommend that users do it as well. But before I move on, I just want to note here that we do buy our US consensus data from FactSet, a leading data company in the US. Most know FactSet. But our Canadian consensus data is curated in-house. So that's something unique to CPMS that we do. And now we'll just go on to the last topic area, which is ESG. So here we're going to keep it really short, and the discussion on ESG is going to be very, very short, but we plan on creating a separate workshop for these factors later this year. So hang tight, there will be a workshop specifically on ESG. So we'll just talk very briefly about what you can source from this category. So if we're in ESG and we're in revenue share, we can find items such as gambling operations as a percentage of revenue, tobacco-related products as a percentage of revenue, oil and gas generation as a percentage of revenue, and so on. The company involvement section includes factors for level of involvement in terms of percentages of ownership. So companies' involvement in cannabis producing companies, oil and gas exploration businesses, and et cetera. But happy to talk a bit more about that if we take it through email or on a Zoom call or something like that. And as the name suggests here, the carbon rating category includes factors pertaining to carbon emissions. And last but not least, the risk subcategory, which quantifies the qualitative research done by the analysts at Sustainalytics. So this is kind of what we saw with the MS research category for our equity analysts, and these factors are quite unique. So before we move on to the last element of the webinar, which is the factor building tool, I wanted to mention quickly that clients can submit or they can request for new factors to be included in our database. So if this is something that you're interested in, please do submit your ideas to one of our team members, and we'll do our best to try to get this factor added in. And obviously we'll have a priority list, but the more, I guess, common or if uncommon factors will still be considered. So please do submit your ideas when you do get a chance. So here, I'm just going to exit out and go back to the home page just for simplicity and to make the UI a little cleaner before I show you the tool. However, you don't need to be on the home page to create a factor. So the factor creation tool is used for creating your own factors, essentially. And this tool is found under Tools, User Defined Variable, and we can press Create. And also, if you've already created one, you can edit it through this tool here. But here, we're going to create a brand new factor. So press Create. And here, CPMS will open the creation interface for users to develop their own factors. So the first step in creating your own factor is to assign an identifier to that factor. And for example, the quarterly earnings momentum factor has an identifier as QEM, but we doesn't have to be 3 characters. It can actually be up to 7 characters. So here, just as an example, I'll do A, B, C, D, E, F, G. And depending on what factor I'm trying to build, I can also add a description of what we're trying to capture here. But as a simple example, I'm just going to put price, nothing too specific. And once that is done, we can select up to 4 data items to use in our calculation of the factor, essentially. And for here, I'm going to keep it super simple, but I'm going to pick a few data items that I want to use to create the factor in question. So I'll click data item A, and this again will populate the factor navigation tree. I'm just going to go into size and liquidity and scroll down here. And let's say for data item A, I'm going to choose the price from 60 days ago. So I'll just press OK, making something super simple here. So for data item B, let's say I want to look at the price from 180 days ago. So I'll click OK. So now that I've selected the 2 data items, here A and here B, I can use a particular formula that I want to use to calculate my custom factor. So here, if I press this button, you'll see that CPMS has predefined formulas that you can use, and they all have that identifier CPMS beside them. So I could do A divided by B, A plus B, A minus B. Here, I'm going to do A minus B. I want the price 60 days ago to be larger than the price from 180 days ago. So I'll click A minus B. You can also customize your own through these data items. So here, if I scroll down to the bottom, you'll see user. So that means I've created them myself. We can see that I have A minus B divided by A and also A minus B divided by B. So just a few that I made in the past, just playing around. But I can always, explain this in more detail after this webinar, because some of these aren't as simple as just explaining it in a few words, essentially. So happy to take this away to another conversation. But here, I've selected my formula, I've selected my data items. Before I move on to the settings down here, I want to mention that we have an advanced definition or advanced formula builder. And this is new with CPMS 5.9, and you can learn more information about it by clicking this question mark here. And this will open a PDF that will explain what this feature does. But again, always happy to talk about it on a one-on-one basis. But to activate this advanced definition builder, you need to be in Tools, User Preferences, and actually check that box off for the advanced formula builder. So again, if that's something that you want to check off and play around with, I can show you where that feature is in the Q&A session or again, after the call. So I'll skip this for now, but here, I'm going to sort my order by high value is best. I can do high value or low value. Here, I want the price from 60 days ago to be larger than the price from 180 days ago. So I'm going to do high value is best. The settings down here all pertain to the attribution summaries. I'm not going to touch on it again unless somebody has a question for that. I can talk on that later. But just as an example here, I'm going to change the setting from divide benchmark by column to subtract benchmark from column. And the reason I'm doing that is because A minus B is going to get me a number, not a ratio, not a percentage. So if it's a percentage, you want to do divide benchmark by column, or a ratio. And if it's just a number, like a value, like market cap, for example, you want to do subtract benchmark from column. So what I'll do now is I'll press create. And CPMS is going to say a new variable, A, B, C, D, E, F, G, has been created. Do you want to create another variable? I'm going to say no, but for convenience, you could press yes and keep making as many as your heart desires. So that's an option that we have for users. I'm going to click no. It's just going to take a second to load. And now you might be saying, okay, where do I go find this factor that I just created? Well, what we can do is go back to the strategies tab, or the strategies module, sorry. I can click edit on the strategies by list once again, open the tool, add, just take a second, and here at the bottom, so at the bottom here, we have user defined. So now I can see my factor that I created, A, B, C, D, E, F, G, price, October 2002, and this displays the calculation and the sort value order as well. Okay, so that was about it for the presentation today. Again, we didn't go too deep in the weeds, but we are happy to take any of these topics that we talked about away and discuss on a call or whatever it may be. We're happy to discuss this on a one-on-one basis. So I'll just finish up the presentation and we'll go over the closing remarks. So I'll just open CPMS here. And I'll go back to the closing remarks. And I'll just have my contact details here. So just to summarize for today, in this workshop, we touched on a few factors within the CPMS database. And we provided a bit of guidance as to when, why, and how to possibly use them. And secondly, in the second part of the webinar, we opened the factor building tool, walk through an example of a simple factor one can create. Obviously, there's a lot more that you can do with that tool, and we are happy to help you out if you want to create your own. So please, please, please feel free to email or call with any suggestions on what workshops we can make next. But we are planning on expanding our Learning Center and Workshops tab on the homepage of the desktop product. And we do have 2 other workshops that we plan to release in the coming months. So that's good news. There's going to be other ones. One's going to be on ESG, and we're still figuring out the second one. But the ESG one will be coming soon. And we do have the ability to make specific training videos. So I've done this in the past. So please let us know your thoughts, and I'd be happy to create a video for you. And now I will check the chat for any questions, see if anybody has anything pressing to say. So Habib said, given the plethora of factors, which ones have illustrated the greatest alpha or return contribution? Well, that is a good question. The thing is, on an individual factor basis, we've used a single variable test in the past, and I won't go too deep into the weeds to explain what the single variable testing is. I can always follow up in an email afterwards, but essentially on a single factor analysis, we can see which factors perform the best based on like a specific subset of stocks. So again, we can talk about that afterwards, but when you use particular factors in tandem, we don't have a way to run multiple iterations to essentially see what factors in tandem work well together, but we are able to see which factors on an individual basis using our single variable testing to see which factors outperform and underperform. However, the single variable testing is an internal tool that we use ourselves. And again, it's not as simplistic as one factor is better than the other in tandem with another factor. We only can really do it on a single variable test essentially. But again, Habib, I'll follow up with an email, and I can get you some more information on that as well. So are there any other questions? Just seeing here in the chat. Says, if I create a new variable, will it be good for backtest as well? So great question. It depends on what data items you are using in the creation of the factor. So how we saw before, if I go back to CPMS here, and I click edit, oh, sorry, wrong area. If I go back to tools, and let's say I go user defined variables and edit, this specific factor here, you can see that the data actually, well, when we were creating it, the data was from 2002. So it said you should allow me to create a favorite folder so I can save my common items. I don't like looking for the same item all over again when I need them. So that's actually a great suggestion. The product manager and I and our team have discussed this in the past, and we are working on making a section where we can use the favorites or the ones you've used constantly. So where we're planning on implementing this is here. So if I go and edit on my buy list, here we have a lot of free real estate under or beside the add and remove button. We're planning on adding some feature where you can save the favorites, and that way, if you're constantly using QEM or QSRP, you can just quickly add that in. So great suggestion. We are working on it, and we think that's a great idea. So that will hopefully be coming soon. Seeing if there's anything. How recent is the latest batch of single variable testing? Please email it to me. I can go ahead and double check. I believe it's been somewhat recent, but I don't want to, again, I'm not too sure, but I will definitely look into that, and I could always email you over the Excel output of the single variable testing. So it says, do you have a list of common popular items that you can share with us? So yes and no. I would say that the predefined strategies or the strategies that we've created in the past include factors that we believe have outperformed, because obviously we want to include factors that are generating the most alpha and are performing well, down markets, up markets, etc. So I would say definitely the factors included in our predefined strategies. I can go back and ask our team if we have a list of factors that I guess are in the top, let's say, quintile or quartile that users can use. But again, that single variable testing is used for seeing which factors are outperforming, underperforming over a certain time frame. So would this lesson be available to listen in the future? Yeah, so we, as soon as this workshop's done, what I'm going to do is we're going to upload it to YouTube, and then we import it into the product. So it'll be under the workshops tab, and you can watch it as many times as you want, and that link will be available at all times. So I will post this afterwards, and the recording is being recorded right now, or the webinar is being recorded right now. So Robert said, okay. Seeing if there's any other questions. Says, anonymous attendee, please send the grade formula document. Okay, no problem. I will double check and see the email associated with your account, and I'll send you the grades or the formula document. See here. Okay, that I'm just seeing if there's any other questions. Anybody want to open? No. Okay, I'm not seeing any other questions. So again, always available to chat on a one-on-one basis. Send me an email. Those that have asked for information, I will follow up after this webinar and provide you with that information. And any of the information that I'm not too sure about right now, I'll obviously double check and see what we can source for you. But again, we want to provide the most information possible. So we'll get back to you on that. And I just want to thank everyone again for joining the workshop. I appreciate it after a long weekend. I know some of you may be tired, so thank you again, and thank you for taking the time to view this workshop. I've included my contact details here on this last slide. So if you want to reach out by phone or call, happy to answer any questions. And if I can't answer it myself, I'll always go to the right person, get the answer, and provide it to you as soon as possible. So thanks again, everyone, for joining, and have a great rest of your day. Take care.